What's going on, everybody? It's your boy Crypto Wolf back again, and for today's video I'm going to do something a little bit different. I'm going to be talking about the most important tool when it comes to trading, which obviously is yourself, your brain. Now, when you are trading, more important than the indicators, more important than, even market cipher or anything else, is the mentality that you bring into it with you. Because regardless of how well your technical analysis is, if you don't come into it with the right mindset, you're going to screw it up and you are going to be your own worst enemy. And many of you may already even know that, but maybe don't know ways to get better at it or what to be correcting even. And so this one is essentially going to be on conquering fear, because fear is probably the number one biggest impediment to successful trading. Whether it be crypto, forex, stocks, anything else, doesn't matter. And as you can see in our little picture right here, we got this guy hanging off the cliff over here, like that cliffhanger movie. But facing that fear is going to be integral to that process, or more so even learning to ignore or suppress or dispel that fear, because you're still going to feel it, especially when you're doing, higher value trades, particularly volatile markets, whatever it might be. You're still going to feel it. I mean, we're human, everybody's going to feel it. But the point is to be able to stick to the plan, stick to what you set out to do, and not let that fear overcome you and let you, switch up on what your whole game plan was going into the trade. And for doing this, and where this kind of came from was, I've just been watching stuff here and there, trying to get an idea of what other people are doing and talking about in regards to this, things that maybe I haven't thought of. And I came across this little YouTube playlist here, which is taken from a little conference that this guy right here, Tom, his name is like TraderTom. Yeah. And he's I think a Dutch guy who gave a speech in London specifically about how to develop a trader mindset. It's broken up into 8 parts. Technically it's 7. The last 2, for whatever reason, are the same 10-minute closer. But it's pretty interesting what he talks about. Now, it's not the greatest little speech, little spiel that he's got going here, but there are definitely some interesting things to take from it. So I took some little notes. I'm going to do like a relatively quick breakdown, because I think the whole thing might be like 2 hours or something like that. And so if you don't want to watch it, I'll do a little breakdown here. If you're interested and you want to watch the whole thing, because, watching him give the speech is going to be a little better than me just breaking it down. And he's an interesting guy to listen to. Plus he's got some, good stories. I'll leave the link in the description and check it out if you want to. But let's get into it. So, obviously it's called Developing the Trader Mindset. And the number one aspect of that is going to be conquering fear. Now, an interesting thing that he touches on is that he says, practice doesn't make perfect, practice makes permanent. And I'll get into it a little bit more later on, but basically what he's saying is that, you can practice all you want, you can be the greatest at doing technical analysis, but if you are not overcoming your psychological, limitations, if you will, it doesn't matter. You're really only reinforcing the wrong behavior. And that, it's not a technical analysis problem, but a thinking problem. And he gives a couple little interesting stats here. So he generally trades the Dow, the Dow Jones, most liquidity out of anything, most highly traded anything out of anybody. And so he just kind of throwing some stuff out at the beginning. And he tends to take this approach of like scenarios, kind of historical look at the way things tend to behave and he goes into his trading day with those statistics in mind. Things like 48% of gaps tend to get filled within the first 3 hours, on Monday morning. And obviously, this doesn't necessarily apply so much to crypto unless you're doing Bitcoin futures. But again, the Bitcoin price tends to follow pretty closely with the Bitcoin futures and, the traditional markets. And then aside from that 48% being filled within 3 hours, 78.6% of those gaps get filled by 72 hours, so by 3 days. Interesting thing just to keep an eye on. Whether right or wrong, what really matters is whether traders out there agree with me. And that's kind of what he's saying. So when you're going and you are looking at the charts, you are trying to figure out where the price is going, and you have your own idea of where it's going. Regardless of whether or not you may be right or not, or whether you think it's going to a certain place, what's almost more important is where everybody else is going to think that the price is going to go, where the trend is going to go. Because let's face it, one person doesn't, swing the market all by themselves. It's a very big collective of people all buying and selling. And if there's a history of, when some kind of event happens or some larger pattern or scenario happens that, if 75% of the time after such and such happens, it tends to go down, other people are going to know that too. And so, if it seems like, okay, like right now with Bitcoin, we've been seeing the weekends have been going sideways. And so it's been a pretty safe bet that, over the weekends when, traditional markets are closed for like the last 4 weekends in a row, at least, it's been going straight sideways. Case in point right there. What else do we got here? So anyone who says the market is going, X direction typically has a vested interest or a bias toward that direction. So when you're listening to, say, people on YouTube, potentially like me, even though I really never give you any kind of macro direction, because this is probably the most important aspect aside from the conquering your fear that you could get out of this video, and that is, it doesn't matter which direction it's going. It doesn't matter which direction somebody else thinks it's going to go. It doesn't matter which direction I think it's going to go, even to myself. It really doesn't. And it took a while to break that bad habit in my head personally, because, when I got back into crypto, I was watching particularly large YouTube channel, and he is definitely somebody who has his biases on which way he wants the market to go, which way he thinks the market's going to go. And of course, everybody else does too. You watch any of the big to small YouTube crypto channels, everybody has an idea of which way they think the market's going, which way they want the market to go, and what they would realistically tell people when asked where they think it's going to go. Because let's face it, people might be thinking, it seems like, honestly, it seems like it's going to go down. But, when they're making videos or talking to people, they kind of say like, no, yeah, I'm bullish on it. I think we're going up. Okay, we may have a little bit of a pullback, and some honesty kind of comes out. But a lot of people tend to coach their speech when they're talking about this, because let's face it, everybody being bullish gets more views, gets more, interest in the market and all that stuff. It's understandable, but, from my perspective, I've managed to teach myself that I don't care which way it's going. All I care about is trying to figure out where it's going right now, where it could potentially be going over the course of, say, a few days, and where it's going to be reversing, what potential reversal points are coming up and things like that that are pertinent to trading, specifically like, scalping and swing trading within the span of, hours. Beyond that, it's kind of out of reach at this point. Like, it doesn't matter where it's going to be, a month or even a couple weeks from now, because I can't trade on that right now. And there's really no point in even trying to, because there's plenty of money to be made trading, right in the here and now. And so, where do we leave off? Okay, so another interesting thing he was talking about is that our brain has a tendency to see things and patterns that we're looking for. So along with those biases of which way we want it to go, which way we think it's going, when we're looking at a chart and we're saying, okay, I'm gonna draw some lines on here, start doing a little technical analysis, where do I think it's gonna go? Generally speaking, we are going to look for patterns that fit our preconception. It's just the way it is. I mean, it's the way our brain works. We grow up doing, connect the dots books and coloring books and even puzzles. You know what the picture of the puzzle looks like. And as you're putting these pieces together, you definitely have a preconception of what it should come out like. And so over years, our brains just kind of train that way. And then when it comes to this, awkward example, but say, we got this channel going right here. Let's say we rewind the clock back to here, and you might be thinking, okay, well, we're probably going to come down to this support level right here. And so, so let's say we're like right here. We're thinking, okay, we came up, still a little shy, but we're within this channel. Maybe we go into a short, a little bit of a longer term short thing. All right, I'm going to set my close right when we get to this support level, and we're going. Never made it, came back, completely broke out. Just an example of things aren't necessarily going to work out the way you think they will. And it is easy to, create patterns and see indicators or make indicators look a certain way to fit that preconception, and you can get in trouble when it doesn't play out. So stay open-minded, I guess is the point there. All right. Oh, and they have a word for that. Actually, I snapshotted some of the slides here. Got a word for that. It's called apophenia. Kind of like what's kind of like a patternitis type thing, where you just tend to see what you want. When people see the Virgin Mary and a crusty old wall with the paint peeling, if you're looking for something, you're gonna find it. Whether or not it really is what it was you're looking for may or may not be the case, but odds are, you look hard enough, you're gonna see it somewhere. And again, this is a nice little quote. We don't see things as they are. We see them as we are. So, nice little quote there. Moving on. So, okay, so back into the trading a little bit, some stats. So, from what he was saying, between like 75 and 80%, to 85, even up to 90%, depending on where you're polling, of traders are losing. Why? You think about, okay, so that 75 to 90%, 70 to 90% of traders, obviously that's the majority. So that would actually be the norm. And I've definitely seen like certain sites where they've been kind of regulated to that they have to list the percentage of people who lose money using their service. And I've seen some 75s is a fairly common number. So let's say if 75% of traders are losing money, that would be the norm, would it not? So the normal trader overall isn't doing so hot. Now, the purpose of trading is to make money, right? It is not to be proven right. It is not to say, okay, I drew all my little trend lines. I got my fib retracements, all kind of other stuff. And I think the price is, coming back down to here. And then we're going to retest this trend line right here. And so by doing that, which admittedly a lot of people do, you are going into, okay, say we want to do a trade right now, and that's what we're thinking. That's how we're feeling. You might do a short and try to get it down to that trend line. Maybe you close at the trend line. That's your plan. Well, if that's what, typically most traders are kind of doing, or at least, the kind of way they're doing it, obviously a little bit more technical and complicated than that. That was just pulled that out of my ass. But why are 75 to 85-ish% of traders losing overall? Why are they, not doing so great? Why is it that the large majority of people who get into trading don't make it past the first year? Well, I'm willing to bet that most of them, not necessarily all the new people, but most traders know technical analysis. They've been going through, they've been reading books, watching YouTube videos, going to conferences, taking the training courses. Everybody knows technical analysis to a degree. Everybody's out here drawing pretty pictures on the charts. So what's the problem? Well, obviously that's the norm, and everybody's kind of doing it that way. Everybody's been taught that way. Maybe there's something missing that is contributing to being more of a losing trader than a winning trader. And I know I can speak for myself personally that this is absolutely true, or it was in my case, and I've heard from plenty of other people who it was in their case. And the big problem wasn't their technical analysis, wasn't the tools they were using or anything like that. It was themselves. It was myself. I was the one who was screwing it up. And in their case, usually it was them who were screwing it up. You can't even count how many stories you hear of people that say, oh man, I wish I didn't close the trade. It kept going up. Oh, it would have been great, but I panicked and closed the trade. Or, it was going down and it wasn't bad. It seemed like it was, it didn't look like it was going to go down much. I figured, all right, I'm just going to ride it out. And let me tell you, if that phrase ever goes through your mind, just ride it out, you should cut it right there. You should just cut it right there. But obviously they tried to ride it out and it kept on going down. And now you're just getting deeper, deeper, deeper into the hole. That brings a whole nother slew of issues, particularly with trading mentality and psychology. And I'll get into that in a minute. But so there, he has a little phrase here that is kind of well known amongst some of these, good traders. They call it the deception of charts. It's that our eyes will seek that which confirms what you're looking for rather than looking objectively. So there's a key one here. So trading is a series of opportunities to be taken with risk management. So rather than, thinking about, okay, I just had this trade, I'm down $100, I got to make that 100 back, and I want to try to obviously get into the green as well. And you start stringing all these trades together. You lost $1,000 yesterday. We got to try to make up for that. We got to get our account back up to say 10 grand or something like that, and you have these goals that you start setting, and you're already going down a bad road, because you want to look at it, each trade individually. The previous one is irrelevant, doesn't matter, forget it, wipe it out of your mind. Treat it like this trade, the one you're doing right now, is the only trade, because you are inviting emotion into your trading when you start thinking about, like, all right, I have to make back that $100 or that $1,000 or whatever it might be, because now you are getting desperation into it. You are going to lose that objectivity, and you're going to make maybe poor decisions that you wouldn't have otherwise made had you been looking at it dispassionately. So that's why I said, look at it as a series of opportunities to be taken, rather than a series of like building blocks, like, oh, okay, well, hey, we did good on this trade, so maybe we'll take it easy on the next one. Treat them individually. Doesn't matter what you did the last trade, or lost my ass on that last trade, I need to come back hard, 4 times the leverage that we had on the previous one to make up for it. Again, going down the wrong road. But so he says, good traders have a different philosophy than, quote, normal traders. And he tells a little story here. So there was a guy who he knew, that he talked to, was the owner of a hedge fund, and his strategy was, he used to trade the 1 minute chart. I think it was like euro dollar or something like that, and kind of irrelevant, but he had a 20%-ish hit rate. So he was only winning 20% of his trades. Literally out of 100, 80 trades were a loss. But, and sometimes it'd be up to like 35 tops, but 35% was like the most hit rate he said he ever really had. But still, he was wildly successful, to the point where made his millions, had company, hired traders, the whole 9 yards, made all of them do it his way, ended up retiring off to the beaches, beautiful life, whole 9 yards. And it didn't bother him whatsoever that they had a 20% hit rate. And he's like, well, how? Like, what? How does that not bother you? You think about, you're like, you yourself, or me even, I heard that, and I'm like, 20%? Like, imagine what your portfolio will look like if you had a 20% win rate, the way you are currently trading right now. I imagine everyone listening, myself included, be like, damn, yeah, our ass would have got handed to us so many times, it'd have surgery scars all over it. But what they did was, so every single time they did a trade, if the market immediately didn't go their way, they cut the trade. Every time, clockwork. They use their little system to figure out when to start trades, but every time they started it, if it started going the other way on them, they cut it. Regardless of whether, even if it was only pulling back a little bit and then it was going to continue on, they cut it and they'd restart it after it started coming back. And what happened was, they took like risk management to an extreme degree. Or essentially like extreme risk minimalization. And so obviously, every trade is not going to be a banger. Every trade's not going to be your 400%er. But even the little ones add up, and regardless of how much, they're still wins. You're still in the green. Now, every time they had a losing trade, obviously 80% of them, if they're only losing, tiny bit every time, yeah, it adds up a little bit, but those 20% of good trades far, 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 far outweighed it. And this isn't financial advice. I'm not saying to do what this guy did. Welcome to try. I'm curious to try it. Hell, I mean, it's pretty similar to what I've been doing, actually on and off for the last couple months, been doing little stuff like that. But it hasn't been that bad, actually. I mean, shoot. Yeah, you get some little losses here and there, but it's almost negligible. Moving on. So most all of our trading mistakes are because of fear. You can boil it down to it's always some kind of emotion. I mean, yeah, you can start reading signs and get it wrong and it be, completely logical, but at the same time, you're straying from that original plan that you had. And if you don't have a plan when you're trading, now you're just kind of going off emotion right off rip. And if you're like, all right, oh man, all right, it's going up. I'm going to FOMO in, start this trade, and we'll figure it out after I get it going because I don't want to miss a good entry point. Right there, you already started from emotion. And you can get lucky, sure. Like they say, I mean, half the time people would have a better success rate had they just flipped a coin. Not saying to do that at all, but you want to take emotion out of it. You don't want to start a habit of doing that. And let's see, saying, so the problem isn't knowing enough technical analysis. You should learn technical analysis because, you want that TA to find your entry points, to look at potential reversal points, potential areas that, you want to be looking ready to, halt the trade. Or if you break through a certain area, you might be like, oh, damn, okay, like that's cool. And then, you kind of cool down a little bit, like, all right, I'm not cutting this trade. Shoot, you might add to it. And so TA definitely has its place. And he, in this the little speech that he gives, it almost sounds like he's saying to completely ignore technical analysis, but he's not. It's just sometimes it comes out that way, even though he says the opposite here and there. But he said you need to review the way you think when trading. If 80% lose, what is that 1% trader doing differently? What are those 10% traders doing differently? And so there's an interesting study here. Let me bring up my little slide. Oops, I kind of skipped that one, but that's okay. So there was a study here done of 25,000 traders covering 43 million trades. And what they found was 62% of the traders, were winners, were in the green. But out of the points they were up, 48 pips up, 82 lost. So despite the fact that they won 62% of trades, they were losing more on the losses than they were making on the wins. And you can see the little formula that he does down there with the deficit. He's taking the 62 times 48 and then 38, which is the remainder from the 62, times 82. So despite the fact that, more were winning, they were winning less than people were losing. And that kind of tells you something that, in a case like that, either you have the wrong plan or too much emotion, because if you're letting the trade go back on you that far, either you are just hoping that it's going to turn around, or, whatever indicator or signs that you are using or reading into it obviously aren't working for you because it just kept going down on you. And let's not even mention the fact that, leaving a trade open after it starts going against you, leaving it open for days, like just waiting for it to come back up, is terrible for your mental health. If you haven't gone through that, Terrible for your mental health. Not to mention, you got to sleep sometime, and you are guaranteed to have cases where you go to sleep and it finally comes up on you, and by the time you wake up, it came back down, and you missed that exit point that you've been waiting for like a day or two or more even. So it's just interesting. I was surprised how much, people were losing in these statistics. Let's see, where are we here? So oftentimes people are always looking for that next big move. They're looking for that big macro change in the trend. And like you put here, so people love to find the low in a bear trend. Are we at the bottom yet? Is this the bottom? Or people love to find the top in a bull trend. Like, hey, are we at the peak? Is it maxed out? Are we going to start coming back down? Is this the end of the bull market? I'm sure a whole lot of you guys have probably heard that one not too long ago. I mean, hell, even hearing, the low of the bear trend, we've been hearing that one all week. 3, people think every reaction in a trend is the beginning of a new trend. Ain't that the truth? I mean, really, really, really. I mean, that's actually one reason that I cut down on watching crypto YouTube, because it was starting to drive me nuts that every time, and I'll show you an example here even, every time we change direction, you would hear on all the channels, now I'm going dailies a little more, that all the thumbnails start saying, Bitcoin bull market back on, or are we heading to 100K right now? And then we start coming down here, and is this the beginning of the bear market? Are we in the bear market? Every time, even on this little guy here, every time without fail. Right here had all the bullishness just in this little uptrend right there. And then you started hearing bearishness again, just, over these couple right here. So basically, the market mentality is fickle. It is super fickle. Everybody is real quick to jump to assumptions. And even if they're not assuming, even if they're just asking, they say, could this be the bear market? That means they're thinking about it. And maybe they just want some validation, from other people to hear like, hey, do you guys think this is a bear market? Because I don't know, I'm kind of thinking it's a bear market, but I'm not going to think it's a bear market if you don't think it's a bear market. Again, coming back to, I don't care which direction it's going, because you can trade it up, you could trade it down. Technically, you could trade it sideways, even though it sucks. But number 4 here, people are fearful when they should be hopeful. And people are hopeful when they should be fearful. This too is the absolute truth. And Bitcoin is an outstanding example of this. When we're down here, when we're down in the gutter, down in the dumps, we even have that fear and greed index that I basically never look at, but you hear about it. People are super fearful. Everybody think, oh my God, we're going to zero. It's the end. It's over. It's a wrap. When in reality, people should be super hopeful when it's down here, because it is on fire sale. It is dirt cheap. And every time it comes way down like that, it always comes back up, always has cycled, always oscillates, always up and down. Every time it's going down, me personally, I'm thinking, okay, how far down could we possibly go? Long term, obviously, I don't want Bitcoin to go to shit. I mean, you're holding on to some long term, but in the immediate term, I would love it to go down, because that's where the real money is made. That's where I'm hopeful when everybody else is fearful. Because, I am hoping, we get a little 28K pullback or whatever it may be, because like I'm maybe not going all in. I'm not about to go sell my stuff to buy Bitcoin, but I've been saving up for it. Like I'm looking ahead of time, and when we dip down, when we get a nice bear market, when we bottom out or wherever it seems like we may be bottoming out, like heck yeah, I'm going in on it. Like I am hopeful to get it on sale. Likewise up here at the peaks, the fear and greed index is maxed out on the greed. Everybody's like, oh my God, it's going to 100K, it's going to 300K, it's going to 330K, it's going to 1 million. In reality, when you start getting that parabolic blow off top, or even in this case, when you started seeing bearish divergence, you should be fearful. I mean, don't be fearful, don't be afraid. But when everybody else is hopeful, you should be cautious. And when everybody else is, curling up in the corner afraid, thinking, oh my God, it's the end, you should be hopeful, because that's the golden time. That's when you get in. Like they say, when there's blood in the streets, buy property. Well, when there's blood on the charts, when it's red candles cascading, water falling all the way down to the ground, get in there. That's where the real money's made. All right, where are we here? And so why is it that people are, fearful at certain times and hopeful at other times, typically the wrong times? And it comes down to fear and pain avoidance. So human beings are hardwired to avoid pain, like to the point of overruling reason, overruling logic and rationality. And think about it in the context of trading. When, like now, when it starts going up and you're going up, okay, you hit this point and it's kind of pulling back down a little bit. A lot of people get fearful in this game. It's kind of opposite to macro, market cycles. But, people get fearful, like, okay, I'm up, $500 or whatever it may be. And, oh crap, I don't want to lose the gains that, we've made up to this point. So people will half their position, they'll take, 50% profit and be like, okay, I'll keep it going because it doesn't look like it's going to turn back. But they get fearful. And then, after a minute, when it goes up further, they end up saying, oh man, I wish I didn't take profits. Like now, now we're only getting half of what we should be getting from here out. And he talks a lot about this in his presentation. This is kind of like one of the big things that he gets into is, this fearfulness and hopefulness of, when you're in a trade, and you thought you were coming up and it starts pulling back, but you get hopeful. You're like, okay, you know what? It's coming down a little bit, but look, it's starting to turn. It's going sideways a little bit. I'm going to ride it out. I'm going to hope that it continues upward. I'm going to hope that it turns back around. When in reality, I mean, especially if you have market cipher and you're seeing this stuff, you shouldn't be hopeful. You should be, oh shit, and cut your trade. Like if you held out till that long, you should be cutting at that point. Not being, not using hope as a tactic. I don't know. Did anybody see that Deepwater Horizon movie with Mark Wahlberg and what's his name? John Malkovich is down in the shop talking to Mark Wahlberg. And he's like, I could tell that you would think there was something going like wrong with, the way the company was going, talking about BP. And he tells him, yeah, you guys are trying to land the plane with the gas tank on empty. You're using hope as a tactic, and it just doesn't work. That was like one of the best scenes that I've seen in a while. And I'm sure everybody could point out instances in their lives of that being the case. I know, like at work, I've seen it play. I've literally given that analogy at work, quoted that entire scene to people because I'm like, hey, we got to stop doing this crap because it's biting us in the ass every single time. And we end up having to, like, rush and hustle up, extra hard right at the last minute. And it's ridiculous. Like, why not work smarter ahead of time, figure things out. And then when it comes to trading, it's kind of a similar thing where you have your plan ahead of time and you're not trading on hope. You're trading on, the strategy that you went into it with. And if it's going against that strategy, cut it. You can always restart. You can always open a new trade. Like, don't be sitting here just walking through the losses and then finally, it starts coming down here. Maybe you set your stop loss at the bottom of this low right here, and you're watching this thing already starting to dip. Like, are you gonna, like, well, okay, like, the momentum wave was coming up and, it's starting to come down, but it's kind of clipping a little bit. And, you're gonna convince yourself of reasons why it might do what you want it to, rather than accepting the reality of what it is actually doing. And I'm sure there were people right here in this trade that it happened to. I bet it. So again, in the effort to avoid that pain, of having to close that trade at a loss, ended up closing it at a worse loss, or in order to avoid that pain of it potentially coming back and you losing some of your gains, maybe you missed out on this trend continuing, which, believe me, I've done it. I have absolutely done it. I mean, a lot of people out here talk about taking profits and don't necessarily, and this is just my opinion, don't necessarily have the best, specifics on that. When you're telling people, like, take profits, and by the way, yeah, take profits, but don't just do it the very first second that you start getting fearful. Look into it a little bit, do your technical analysis. And if you're not comfortable with that, then okay, just cut the trade and restart it, after, cut the trade and restart it after that little pullback is done and just start fresh. Believe me, it's better for mental health. I'll tell you that one. Like, there's no limit on how many trades you can do. I don't think anybody has a limit. All right, moving on here. Where the hell were we? Okay. So yeah, he says, actually, we got a slide for that. Now this one's pretty good. So he just kind of gives, what is the action that you're doing, the reason behind it, and the actual subconscious reason behind it. I'm letting my loss run. I'm hoping. Why? To avoid pain. I'm letting my loss run. Reason, indicator, fib, etc. says so. Well, now you're just using that as an excuse, kind of. But again, same thing, avoid pain. I'm taking my profits. You can't go broke taking a profit. Avoiding pain. It's all this stuff that I kind of just talked about. I am winning, so I'm reducing my stake. I want to take it easy now. Avoiding pain. I'm losing, so I'm increasing my stake. I'm trying to get back to where I was. Again, trying to get rid of pain. I made my points for today, so I stop. I'm afraid to lose what I made. Avoiding pain. Trading without real conviction. Reason, I'm bored or scared of missing out. There's your FOMO, or just completely random ass trade entering. And avoid pain of boredom or pain of missing out. Now, are all of these necessarily, like, verboten completely bad? So okay, and this one kind of jumps out at me. So if your indicator specifically, in the case of us that were doing the market cipher thing, if market cipher's telling me that this uptrend is about out of gas, it's about to end, I'm not doing it because I'm trying to avoid pain. I'm doing it because, the analysis we're doing, like right here, we're up, getting bearish divergence, at that point, I'm not cutting that trade because I'm afraid for it to come back. I'm cutting that trade because I pretty much know that it's about to come back. Like, that's the end of the trade. So there's a difference. You know, that doesn't just mean you just let your trades go on and on and on and on and on and on and on because you don't want to, you know, because you're listening to him and he says, well, it says that I shouldn't cut my trade just because such and such. Like, don't get, you know, the wrong idea in the other direction either. Where are we at here? Yeah, again, you know, a big one there is that letting my loss run or increasing my stake in a loss. You know, once you start chasing those losses, like even that, let's say you're down 500, you cut the trade, you got your head in your hands, you're freaking pissed off, like, oh my gosh, like, God forbid you know, lost your rent money or something like that doing it, which, by the way, do not trade or bet your rent money. Seriously, do not bet your rent money. But say something like that's the case, and so you're like, okay, now I have to make it back. And again, you're going into it almost entirely off emotion. You know, you might still be looking for like a legit entry or something like that, but just fueled on emotion. You got, you know, desperation and anger and frustration in the gas tank. Yeah, at that point, you're chasing your losses. You're going to be more desperate and you're going to be taking more risks than you normally would. And remember, risk management, once you start, you know, pissing on that and throwing it out the window, you're opening yourself up to basically just, eventually you're going to wipe out your whole account if you keep acting like that. Let's be real. Heard it from plenty of people, plenty of times. Like big accounts to me, at least, hearing that story. And I don't know about you guys, but I am perfectly fine with learning other people's lessons. I mean, I spent a lifetime of learning things the hard way myself. And after a while, you get to the point where you're like, dude, I should really listen to people when they tell me smart shit, because I'm tired of learning the hard way. And I'm telling you right now, learning the hard way with trading can oftentimes be very uncomfortable in life when you blow your money. Start feeling like you went to the casino and maxed out. It's not good. All right, where are we at? So, let's see. Take a win, walks away so as not to risk losing that money that you just made. Yep, talked about that. Said people are fearful when they should be hopeful and vice versa. Example, the market crashes, people freak out, should be excited to buy low. You talked about that. Position goes against you, you are hoping it turns around. And the position goes well, you become fearful it will turn. Talked about that. Oh, did I skip a slide here? Yeah, this is kind of interesting. So this guy, Charlie D, I guess, you know, big famous trader, says the time you know you've become a good trader is the first day you were able to win by holding and adding to a winning position. There are many people here in the pit that have traded for a long time and who have never added to a winner. And he talks about this a lot in his little presentation here. So unfortunately, it's only human nature to want to cut your winnings. Everett Clip taught me that. I am long in 6 and market goes 7, so get me out. And again, that's that, you know, cutting the trade early type thing. That's human nature. It is also human nature to ride the losses. I am stuck, don't sell. So you got to learn to control that human nature. All right, here. Need to learn to control that fear dispassionately. It's easier to add to a losing trade, feeling like you're getting a better deal, but are you ignoring trend or signs or signals? And let's see, the guy also said, quote, "Everything you do as a good trader hurts. It's uncomfortable. Unless seeing otherwise, you have to fight that humanness." You know, just further elaborating. And I've heard this from a lot of people too. Like, even people joke that they're like, okay, whatever you're going to do, if you're going to, you know, go long on something, whatever, if you're going to do a trade, they're like, pretend you did it and do the opposite. Like, so many people joke, like, you know what? It seems like every time I go long, the market turns on me and goes down. And then every time I try to short, it 180s and starts going up. And I've literally joked about it with people where they're like, you know, I was looking at it and it looked sweet, seemed like it was going to go up. I was about to hit the, you know, the long button. And I was like, you know what? I am so tired of having trades flip on me. He's like, I just hit short for the hell of it. He's like, you know what? Screw it. I'm going to do the opposite of what I normally do, because what I normally do isn't working. And he actually ended up with a better hit rate for those couple days than doing what he thought he should do. Now, I'm not saying necessarily to do that, but it clearly shows that the analysis that he was doing, that he was comfortable with, either wasn't correct or he was just picking bad times to start trades. So what this guy's saying is that, you know, everything you do in trading as a good trader will be uncomfortable. You know, when the trade's going up on you, you're doing well, and it's kind of pulling back or going sideways a little bit, and you're getting that feeling in your gut that you're like, okay, I should take profit, or okay, I should, you know, cut the trade. It's that doing the opposite and adding to the position, like he's saying right here, adding to a winning position, is where, you know, they made their best trades. Now, again, this isn't just a completely blind, you know, wild ass guess kind of thing. You want to have at least some kind of confirmation or something showing that, okay, there's a solid chance that this is just going to keep going. You know, and like, best thing that I'm trying to get in the habit of doing is, if you are, like, actually, I mean, right now is probably a decent example of this. So let's say, you know, you have this, we've been in this, you know, reasonably long downtrend, and we start coming up. Let's say, you know, you had a trade coming from here, kind of going up. You get to about here, a little bit, you know, past this high right over here, the last high on the downswing. Say you get past that, and it looks like, okay, we're going to start cutting back. Then options, you could, you know, take profits and let it ride. You could cut the trade and come back in, you know, after the little pullback, or you could let it go, watch that pullback, and when it seems like it's over and we're getting ready to continue up, add to the position. And I think that, in my opinion, would maybe be the smart way to handle what this guy's talking about. You know, rather than just FOMOing in on top of a winning trade. Seems a little bit more like gambling than trading, but they didn't elaborate into specifics, but I feel like that's the reasonable route to take that. All right. Say, are you confident in your trade? If yes, why? Or are you fearful? Okay, sorry, I fucked that up. Are you confident in your trade? If yes, why are you fearful? Or if no, why are you fearful? If not, why did you even enter the trade? So if you get into a trade and you are not confident in the signs, the indicators that you were looking at that made you think, hey, we should go long right here. If you're not confident, well, why aren't you confident? Is it kind of 50-50? Do you feel like, well, it seems like it might go up, but it could really go either way? If that's how you're feeling, and again, you should be checking across, you know, multiple time frames, looking for confirmations. If you can't find any confirmation, then you probably shouldn't enter the trade, because again, you are kind of just starting with hope. You're starting with emotion. And I've talked about this in like one of the first videos I did, but a good thing to do just to get in the habit of taking emotion out of the equation is trade like a bot. Just trade like a robot. Pretend you're friggin' Arnold Schwarzenegger in Terminator. You are a Skynet machine. You say, okay, every time XYZ happens, I'm going to enter a trade. And then every time ZYX happens, I'm going to close the trade. A good example of that is, say, the VWAP right here. So every time the VWAP crosses the 0 and we get a little green dot, I'm going to go long. And every time the VWAP crosses the 0 and comes back, I'm going to close the trade. And I recommend doing this. Go back through the chart, go do your research, and just measure it out. Just measure it out, every time. And see what the percentages were, what the hit rate is. Had you done that every time? Pick a time frame. I'm on the hourly, which you could do, but it'd be a little easier. Say you did it on 10-minute or the 15-minute. Nice. Not a 1 minute, not a tiny chart, but which you could do it on those two. But a nice rounded number. The trades lasting a little longer and get a little bit more out of them. So example. So okay, right here, VWAP crosses up, and VWAP crosses down. Right about on this candle. Sorry, where it moves over. 1.45%. Not terrible. It's a win. Say you're 10x leverage or something, which be careful with the leverage, not saying to use 10. That's a 14%. Depending on the size of your trade, the size of your position. Those add up. I mean, those add up for sure. Even just them ones and twos, and then like anybody who's been doing it will tell you, they're not all grand slams. They're not all home runs. You got to take them base hits to get there. So say you were doing them robot trades, doing them robo trades, till you came up. Okay, now you got a crossover. Oops. Okay, I bumped the mouse. And going. Came back around here, 2%. Crossed over. Just shy of 4%. So you get the point. You keep doing those. I mean, think about it. You're working an hourly job, whatever you might be making, $20 an hour or something. You think about it in that aspect. Okay, every hour you're making $20. You're doing these little robo trades. How much you make in an hour? I imagine you can make a lot more than $20. So, just saying. All right. Let's see. Yeah, you will never, better to, convince yourself or tell yourself you're never going to get the perfect top and the perfect bottom of every little trend, of every swing. Patience is the key. Just stick to your plan, stick to your strategy, and just take those managed bites. Again, just like the VWAP strategy thing right there. Just take those managed bites. Do it like it's a job. Do it like somebody is, you have a boss that's telling you, all right, this is the way we do things. I want you to hit along every time that VWAP crosses 0. And I want you to close it every time it crosses back. Just take yourself out of the equation. Make yourself a robot. You are just a cog in the machine. Somebody else is telling you, if you want your paycheck, this is how you got to get it. And I guarantee you, in the course of doing that, for, say you do it, I mean, they typically say, you do it for 30 days, it becomes a habit. You do that for at least a week or two, although you're probably going to want to do it more if it's working out, that you will start to train your brain to take the emotion out of trading. All right, and so back to the guy's little presentation here. He starts to get into what he does as like trading prep, like what he does in the morning before, going to work. And one of the things he talks about, did I skip this one? Fuck, I skipped that one. Do this one real quick before I get to that. So, just a little graphics. I have accepted with every inch of my being, with every cell of my belief system, that I have no idea if my next trade will be the best trade of my life or a little loss. Smart. I know with every fiber of my body that this trade can easily turn into my worst trade ever and bust my account if I let it. All I have to do is act like the 90% and hope at the wrong time or fear at the wrong time. I am not a fortune teller. I really don't want what will happen next, so my self-worth is not tied to the outcome of my trade. But I am curious how big my profit can get. Important distinction there. Not how big my profit will get, is how big it can get. That positivity going right there. I am conscious that if I want to be like the 90%, then I will consider targets and invent ideas when to get out. But I am not like the 90%, so I embrace the pain, the uncomfortableness, and run the trade just to see how big my profit will get. Now, a little bit of a disclaimer here. He's been doing this, but for the new person, you want to still be careful. You don't just want to like super gung-ho all in, all right, I'm 50x in the leverage on the entire account, on the entire wallet, and it starts going up and you're super pumped, you're jumping up in the air and just let it keep going, and then just ride it out as it turns around on you. So just a little disclaimer, because it kind of comes off like he's just saying, just keep going. You still want to learn when to cut that trade. But as he's saying, you want to be careful not to cut yourself short either. And we come back around to our little intro picture here. So go into every trade like you're going for the jugular, as though it may be your best trade ever. Don't go in thinking you know what's going to happen. Don't jump on others' predictions because it will bias you. If you're watching people on YouTube and they're all saying like, it's going to be super bullish this week, everything's getting ready to explode, and you're all pumped up like, yeah, we're going up, I'm going long, and we're going to get rich this week. You're coming in with that bias. You're going to see what you want to see. And maybe you start seeing like, you're just seeing dollar signs as you look at the chart, and you're drawing your trend lines, and you're projecting everything to be going up. Don't just stay in the moment, stay in reality. Don't bias your analysis with what you want it to be. Go in with a blank canvas in your mind, because either direction is good. There's the difference between a trader and an investor. An investor always wants it to go up. A trader always wants to know which way it's going. They don't care which way it's going. They just want to know which way it's going. And obviously, in the crypto space, most of us are both. So you got to be a little careful, because obviously you want it to go up. You want your portfolio to go up. But at the same time, trust in the back of your head that over the long term, it'll go up. So, okay, you know what? 5-10 years from now, Bitcoin's going to be up. It's going to be looking beautiful. But in the meantime, I'm trying to make money now. Like, that's 10 years from now. So it's irrelevant to me at this moment. I want to make money now. That's why I'm trading. So I could care less, what next week, next month, next year's 10 years price is going to be. I want to know what's going on today, right now, this hour. When he started, he kind of asks, he says, think like the 10%, not the 90%. How is it that you think like the 90%? What YouTube videos or creators are you watching that have been forming your view on the market? Have you adopted somebody else's uh, perspective, somebody else's view on the charts, especially in the immediate term? Uh, uh, yeah, so there's this other guy, it's a famous trader named Dennis. This was an interesting story. So he was trading and he said that, 97 out of 100 trades were kind of meh, whatever. But those other three were the big money. And so he forced his traders that he hired, not to take profits. And he told them, when it's going up and it's going up, strong, he said, let it go up. And the guy giving the Tom here with the presentation was saying he talked to one of those guys he hired. And the guy was saying it was completely counterintuitive. The hardest thing for him was to be in these trades and to not take profit and to not cut the trade. But he's like, if I would have got fired. And so he's like, my job was what they were telling me. He's like, when it's going up strong, let it go up. And, as a result, the guy, the boss ended up being one of the all-time like trading legends. So food for thought. And now another important one is he says, look at the money like it's just numbers. When you start looking at your trades, specifically the, your unrealized profits or your portfolio, when you start looking at it like, okay, this trade is up 50 grand. And you're just sitting there thinking like, oh man, like this trade is literally up like a brand new truck, or, like a down payment on a house or something like that. You are going to be far more likely to freak out and cut that trade short because you've already counted your chickens before they hatch, so to speak. You've already spent that money in your mind. You already have an idea of what it is, and the thought of that pulling back even a tiny bit shatters that image in your head, shatters that illusion. And the best thing you could do is when you're trading to look at the numbers like they're just that, numbers. Pretend it's Monopoly money. Pretend it's friggin' Skittles if you have to. Because especially if you're in a position like me, to be honest, where I am not rich, I do not have, FU money, nothing like that. So being up, a substantial amount on a trade, it gets the nerves going, the blood pumping, gets you a little bit jittery. And it's when you're in those moments that it is the most teachable opportunity to train yourself to calm it down, stay rational, stick to the strategy, stick to the plan. Because it's one thing to say, okay, I'm going to train myself to stick to the plan while you're on a practice account and you're doing $100 trade on 5x leverage. You're not all that invested in that trade. It's not going to get the juices flowing. It's not going to get the emotion going. But when you're doing, even just like a year ago when I was doing, $1,500 trades, even just, I think it was like 4 or 5x leverage or something at the time, like that was the biggest shit I ever did. And, I was up here looking like I was chugging coffee. Like I got done doing a few back-to-back trades and I went downstairs and my mom just happened to be visiting from out of town for the holidays. I came downstairs, my hands are shaking, my eyes are like glued open. I just got this big old grin on my face and I'm like, holy crap. Like that was super intense. And things were spiking, so I'm trying to like chase it up the spike with the stop loss, trying to hit the top, and it did halfway decent. That's about the only time I would recommend chasing and something like that. Because obviously there wasn't the exchange I was using, like I couldn't just slide up a limit order, which would have been nice. But so I had to basically just kind of chase it up with a stop loss. But I know at one point I was like literally just banging out like limit closes super fast, but it's horrible to try to like chase it and just keep like put the limit in, like put the limit cell in. Nope, cancel. Put the new limit cell in. Like, copy paste the number in real quick. It's crazy. I don't recommend doing it. It was friggin' exercise. But like, it's when you're in those situations where your blood's pumping, the energy's amped up, you feel like you just chugged 3 Red Bulls, like you're bouncing out of your chair. That is the perfect opportunity to train yourself to calm the F down and, get your head back in the game. All right, where are we at here? This is one thing that he does that I thought was kind of cool. So at the beginning of the day, and he said, every morning he mentally prepares himself to ignore and dispel fear. And brings us back to our little opening picture here. And he actually had like a couple pictures of these guys doing like straight vertical free climbing. And he's like, I look at that for like inspiration. He's like, I'll look at that and think like, okay, these guys are overcoming that fear. Because let's face it, as human beings, being in a situation like that is enough to make you pee your pants. I mean, most people just flat out couldn't even do it. Most people, they walk to the edge of like a high balcony or, the rooftop of a building, or you're out on one of them like lookout towers or something like that. And you just start getting weak in the knees. And it is those moments when the fear is real, where you can train yourself to push through it, to overcome it, to ignore it. And I'll say this, like, don't set the goal of saying, well, I'm going to train myself that I just flat out don't feel fear. I'm going to train myself so that, I never feel fear. I am afraid of nothing. I am the almighty Thor. You do not scare me, mere mortal. But don't set that goal, because frankly, in order to reach that goal, you basically have to be like a psychopath, because human beings feel fear. You talk to anybody who has been through the craziest stuff, they'll tell you the same thing, if they're being honest, that, yeah, in a moment like that, say, bullets flying over your head, you're ducking in a little trench, there's mortars going up, or, you're getting shelled on, like if you're in the Ardennes back in the Battle of the Bulge, or if you're getting off the landing craft on the beach of Normandy, all the way up to, Afghanistan, and out of nowhere, IED goes off and rounds start flying past you. In that moment, yeah, everybody feels fear. It's a combination of, that training and knowing what you should be doing, having that plan ahead of time. That's why you train yourself to stick to your strategy. Keep doing that strategy over and over again. You can have, multiple strategies, but especially starting out as a beginner and all the way up to professional traders generally tend to do the same thing. They have their strategy. They've been doing it for years. They've ironed out the details. They know every in and out. They know when the chart starts looking like this, what it's likely to do, because they've been doing that same strategy. They could do it in their sleep at this point. And the fear that may come into it means nothing, because they have the confidence and the experience and the practice and the mental training to handle that. And so, maybe find something, whether it be a picture or, you watch a little video clip or something. That shit's crazy. That reminds you of that. And remember to, dispel that fear. Take the emotion out of it. Because It's that emotion that's going to get you in trouble. It's that emotion that is leading toward these numbers like 70 to 90% losing traders. And you don't want to be a loser, do you? Come on now. You want to be a winner. You want to be saying that you can't take this much winning. We need to stop winning. Can't take winning anymore. I know I butchered that quote, but it's funny. Again, stay in the moment. The trade that you're doing right now is the only trade. Doesn't matter how the last trade went. Doesn't matter, what your balance is looking like. If you completely just got blown out of the water last week and it was a horrible week, don't come into it thinking, I have to make up for that. I've got to do twice as good this week. Just have this trade. You're doing this trade. You want this trade to be outstanding. You want this one trade to go the way you are planning. You want to get in on your entry. You're going up. If you start pulling back, now you're making decisions. Hang in there. In this case, hanging in there may would have been okay to this point. We'll see how it plays out, but I haven't really looked at anything on here beyond just glancing while I'm running my mouth here. Wasn't as good on this side on the Bitcoin, but have that strategy. Stay in the trade, stay in the moment. Don't base your decisions off of the past, specifically your choices in the past. Looking at past performance on the charts is one thing. You say, okay, every time we do this, we tend to do that. Not a guarantee, but it gives you a little framework to work within. You must control your mind. Otherwise, I can't control my future. That was an interesting quote. Practice makes permanent. Coming back to that thing. So they say practice makes perfect, but come on, let's face it, that's BS. That's just something you tell people to get them to keep practicing, like kids playing sports and stuff. Practice only makes perfect if that practice is you are doing it the correct way or you are constantly improving. Although who knows if there's ever such thing as perfect. I'd say you can always improve. You can always shoot for getting better. But, he says practice makes permanent. So if you continue, you keep practicing, you keep doing your strategy, you keep doing the same thing, but you keep on losing, you're just getting better and better and better at losing. I mean, you're getting losing down to a science. You know what I mean? So obviously, if that's the case and it's not working, you got to do something different. You got to switch it up. You got to change it up. Try something else. And then when you find something that starts working, now you keep practicing that. You keep getting better at that thing that works. Yeah, that's about the end of my little notes that I got from his presentation. Again, I'll throw the link down in the description. There's a lot in there that I said that I added in myself. Personally, I think a lot of the stuff I added was pretty damn good, but I may be biased. Like we said, that may just be the direction I wanted this video to go. I thought it was going to be bullish, so I think what I said was pretty damn good. But hopefully you got something out of this. Hopefully it was helpful to you. Let me know if you like this kind of thing, because let's face it, this channel is about trading, specifically trading for beginners and getting better at it, myself included, trying to get better, always constant improvement. I don't give an F if you're over here making millions and you're the greatest trader of all time. Any of these pros in any sport or industry or finance, anything, are always going to be want to be getting better, doing better, being more successful. I mean, otherwise you're just stagnating and then you're going to get bored. So we'll take this little road of improvement together. And I hope you all have a fantastic day. Stay free. Let me know what you thought. Let me know if there's something else you're curious, if you got any questions. If you think I'm an asshole, throw it in the comments. I'm curious to know. Also curious to know, yeah, how you guys are doing. Are you guys doing good trading? Are you having trouble? What are you having trouble with? Yeah, shout it out. Let's work on it. All right. Peace.